Ladies and gentlemen, good day and welcome to TrustLine Holdings Investor Call for PMS Fund. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arunagiri, Founder, CEO, and Chief Investment Officer. Thank you, and over to you, sir.
Thank you. Hi everyone, good afternoon. Welcome to our investor call for the PMS Fund. Thanks for joining on a weekend. Really appreciate that. In the first week of Jan, we had sent out our quarterly newsletter highlighting our performance numbers. Most of you must have had a chance to review it. This call is to take further from there and to provide an opportunity for investors to understand our strategy, our view on how markets are positioned, portfolio actions in the last quarter, and more importantly, our view on how we are placed in terms of portfolio outlook. This time we have tweaked the structure a bit. Instead of starting with a market view, we plan to begin with a commentary on the fund performance and the outlook for the fund. While doing so, we have tried to embed the market view as part of that. So once we are through with that, we will move on to portfolio highlights and recent actions, portfolio actions, and conclude with Q&A session. Overall, we plan to wrap up this session within 45 minutes to 1 hour max. So without taking too much of your time, let me straight get into our discussion. To set the context a little more meaningfully, what I'll do is, instead of looking at only the recent 3 months, the past 3 months, that is last quarter, let me step back a bit and look at the whole last 1 year period. This will provide a little more better context for the environment in which we are and how the portfolio is shaped up over a period of time. So when the year began, that is 2025, the market environment appeared particularly favorable for our value strategy. From April-May onwards, 2025, markets transitioned into a largely sideways setup, in a way anticipated one, where the value themes typically does better compared to momentum. So in a way, we expected value strategy to outperform. Consistent with this, our strategy performed strongly through most of the year, last year, until the end of October. So if you look at the numbers, till October end, we significantly outperformed the small cap index for the year. As of the end of October, our strategy returned a nearly 500 bips outperformance over Nifty 250 small cap index for the trailing 6 months by delivering 17.80% positive returns against 12.72 for the index, Nifty 250 small cap index. However, as often happens in the markets, in an ironical way, the final quarter brought an unexpected twist. November, December turned decisively negative as kind of a fear gripped the broader market. A sharp depreciation in the rupee combined with relentless and indiscriminate selling, which continued even in January, triggered a phase of panic, particularly in small mid-cap stocks. This led to some kind of irrational price actions, kind of a carnage in small caps across large parts of broader small and mid-cap spectrum. Excluding this brief but intense bout of panic, especially in December and later in January, the year 2025 would have clearly stood out as a strong year for our value strategy. Even after factoring this period of panic in December, While the magnitude of our outperformance narrowed, we still managed to outperform by the end of December, despite the severe crack in the broader small and mid-cap space. Basically, why we are saying is, if you look at the number, the one-year returns for the fund, PMS fund, turned negative 5.76 by end of December against negative 6.62 for the BSE small cap index. Now coming to the fund level performance for the December quarter, let me first give you the data for December ending quarter, and then later I'll also share with you the latest numbers as of 5th February. So coming to the fund level performance for the December ending quarter, despite the December carnage in the broader space of small and mid caps, our fund managed to end with a positive return for the quarter. This is for the December quarter at 1.85 against a kind of a flattish negative returns for the Nifty 250 small cap index, minus 0.05. The corresponding number for BSE small cap index was minus 1.28. More importantly, on a 5-year rolling returns metric, our fund underperformance. As all of you know, 5-year we have been marginally underperforming the small cap index. That underperformance level has significantly narrowed in this quarter, which is December quarter, by coming down from around 400 bips plus as of September quarter end to just about 178 bips by end of December quarter. These numbers are for last quarter. So obviously the next question is, what about the latest numbers? Is that our performance continuing? Looking at the latest numbers as on 5th February, the one-year return at the fund level has turned positive at 3.96% for us, for the strategy, against BSE small cap index, which is still ruling negative at about 1.8, trailing 1 year. This is despite a big slump in Jan for us. So which means the strategy, value strategy coming back last 1 year, that is on track. If the broader stock-specific actions had played to the script which we had originally anticipated at the beginning of the year, instead of losing significant steam towards the November, December, Jan due to dislocation, we would be looking at a sharply improved profile for the rolling returns, longer-term rolling returns. So if the sideways stock-specific setup continues, if it continues coming year, it is reasonable to expect a sharp turnaround in our rolling returns. So looking ahead, the next critical question is the market going to be sideways again in 2026, or will the momentum come back? Like what we had seen in 2024, where the market was on a one-way momentum. So very interesting question. To answer it, we need to look at the evolving backdrop for the market. If you look at on the surface, several factors probably seem to suggest a return of momentum. On one side, your reforms are back on track. Budget was broadly positive, not much of negatives. There is continued focus and acceleration on FTAs. Currency kind of stabilizing, and macro indicators are reasonably supportive. Add to this the expectation of double-digit earning growth in FY27, which is a consensus view. It probably is easy to conclude that the market might get momentum, especially if FIs start coming back. But in our view, that conclusion could be completely misleading. The biggest challenge to this momentum thesis lies in the broader market valuation, particularly in small and mid caps. Even after this sharp correction and carnage in small mid caps in November, December and Jan, valuations at the index level remain elevated when compared to long-term historical averages. At the peak in 2024, that is in September 2024, small mid-cap indices were trading at roughly 30 to 35 times earnings. Post this sharp correction last quarter and in January, valuations have, of course, moderated, but it is still trading at about 26 to 28 times. But that's very, very expensive compared to historical context. What this implies is that the market needs to spend more time in sideways, either through further time correction or through a prolonged pause for earnings to catch up with these valuations. We are talking only with respect to the broader small and mid-cap index. If you look at the Nifty and Sensex, probably the valuations have moderated and they are trading at multiples which are in line with historical averages. Without that adjustment in valuation, a sustained momentum-led rally in the broader small and mid-caps becomes difficult. As a result, while we may see select momentum returning in large caps, especially if FIS flows come back in a meaningful way, which might, because especially when you look at the signs of global AI trade cooling off, last 2 weeks if you look at India has been outperforming the Asian peers precisely because the trade on AI is taking a little bit of a backseat. One is not really sure whether this will continue. But if it continues, there is a good reason to expect FIS to look at India again favorably. So we might see select pockets where momentum is returning in large caps, but small mid caps, in our view, any fireworks on the small mid caps in the index will probably be challenging. So from our perspective, the current period will continue to be sideways setup for small and mid caps at the index level, which means it will continue to favor a value strategy like ours. That is bottom-up stock picking. So if you are sitting on the right stock with certain earning triggers, with some turnaround signals, those stocks will continue to do well, but the broader index level fireworks is very unlikely for small and mid caps. No one can be sure about any of these, but looking at the current setup, looking at the valuation metrics, this is what we feel probably would happen. Rather, in terms of probability, this has more probability than, having a one-way kind of a momentum returning to small mid-cap indices. So in summary, what we would like to conclude is, in terms of market view, the macro backdrop is improving. Valuations, the broader market still calls for patience. A sideways setup is more likely to persist, especially in the broader small mid caps, and that will continue to favor a value strategy like ours. So with this, let me conclude my opening commentary. Thanks a lot for patient listening. Thanks a lot for a lot of questions. I really enjoyed, responding to all of them. Look forward to, seeing you in the next. Thank you.
Thank you very much. On behalf of TrustLine Holdings, we conclude this conference. Thank you for joining with us today.
For more videos, subscribe to our YouTube channel for our regular updates and follow us on other social medias.